Do we know what GE's business is going to look like in 10 months?
No.
So then what makes you think it's going to go higher? How can you actually put a valuation on a company you don't know how it's going to look?
And that's why it's an $18 stock, right? I mean, the visibility is pretty low, but the underlying assets are great. I mean, you have an aerospace asset alone that's probably worth 2/3 of the market cap, and it's 20% of the revenues. I mean, you have a healthcare asset that's worth probably $60 billion. So that you add those together and you get about $160, which is really where the market cap is now, $160 billion. So that's 40% of the revenues of the company. You have another 60% of the revenues of the company to provide upside.
So you think it should trade on a sum of the parts basis, and there shouldn't be a conglomerate discount
when these
associated with GE?
Yeah, when these things get broken, you really have to peel back the layer and look at the assets and just say, what is here? What's it worth? And what's the revenue base, and what can we actually earn out of this thing? And we still think it's a good company with good assets. It's had a terrible year.
What should they keep? What should they sell?
Well, you could make an argument that healthcare doesn't really fit in the portfolio anymore. I mean, there's no synergies. The power business probably doesn't have the growth profile that they want long term, so I think you could make a pretty strong argument that business gets parsed out over time.
So you keep locomotives and you keep airplanes and you keep what?
I mean, you may end up with aerospace at the end of the day. I mean, it's really the lion's share of the company now.
You turn into Rockwell Collins.
Yeah. I mean, or Boeing, right? And Boeing trades at a pretty darn good multiple.
So what kind of multiple do you put on GE? I mean, right now the estimate is for, it looks like consensus is $1.04 for this year. So actually right now it's trading a little bit more expensively than what it should be trading at given the estimates for this year. So do you think that estimates, in your estimation, will actually probably rise this year or fall?
Well, 12 months ago we were talking about $2 of earnings power, right? And that's degraded probably to the tune of about 50 cents. I still think there's about $1.50, $1.55 of normalized earnings.
Right, okay.
Just way above consensus. The dollar is a trough number, so I don't think you can really value it, as if that's a steady state earnings number.
How do you sum up the Immelt years? Was he just colossally stricken with bad timing, or was it something different?
Colossally overpaid for bad timing, but no. I mean, he had 15 years to turn around this company, and 75-80% of the acquisitions he made were money losers. We get a net return on the acquisitions that he made of below zero. Sold assets at the bottom, bought things at the peak, and that's really the era.
Yeah. So, I mean, I guess one could make the argument. I mean, let me just try this out on you. That you see a conglomerate in which pieces don't have a lot of sort of thematic synergy. But to me, General Electric, and I'm not a defender of it, don't own it, to me, it is an infrastructure company.
Yeah.
Healthcare infrastructure, transportation infrastructure, power, water, oil infrastructure. That is the theme to me.
Yeah. Well, look, if you can manage a portfolio that large and manage the costs and manage the complexity, it works. They haven't been able to manage that. So, I mean, you have a new CEO. Can he manage that? He's got a little time to prove that out, but he doesn't have a lot of time. I mean, the conglomerate model is antiquated. It doesn't work anymore. I mean, there's so few companies that have been able to pull it off, and even those who've been able to pull it off, like a Danaher, have been forced to spin off assets.
Why should we have confidence in John Flannery?
I don't think we have much.
I'm not saying we shouldn't. I don't know the man at all, but has there been anything you've seen? David Faber did that great interview with Flannery, and a lot of people came away and said it didn't sound like he had a lot of answers.
Well, I think it's early days. I mean, his first move was to put Ed Gardner on the board from Trian, right? So, I mean, you don't put him on the board if you're not going to make some substantive changes. I mean, he fired half the board. There's been, fairly meaningful layoffs. I mean, he's taking actions.
Stock is 18 now. Where is it in a year?
I think in a year it's easy, 22, 23, but I think if you can get visibility on a ramp back to that $1.50-ish type earnings number, I think it's a high 20 stock again.